Yeah, what up, y'all? This is Justin McKissick Larry, checking in live from St. Louis, Missouri. I am a algorithmic trading developer. That means I trade based on algorithms. An algorithm is nothing but a series of indicators that responds to live data. And I trade based off the raw price action that we see right here on the right. Okay, so let me show you. Right here to the right is where the price is for Bitcoin right now. Today's date, it is the 13th of December, 2025. Right now, we are in an official downtrend. That means we're in a bear market. That means it's a sell. That means the price is going to continuously go down. Back to my algorithm, okay? So on the chart, you see moving averages, okay? A moving average indicator is an indicator that simply, in layman's terms, trail the direction the price is going for whatever time frame that we're trading off of. Also, moving average indicators adapt to whatever time frame automatically. So if I was to go on a 1 minute from the month, right now I'm on the monthly time frame. Let's go to the 1 minute time frame. We now see all these moving averages adapting to what's going on with the price for us the time frame, because smaller time frames just mean more movement, right? But the way I got my moving averages set up, everything is adapting correctly and stuff like that. But let's go back to the 1 month time frame, then I'll go back down to the minute. Okay, right now we see we're in profit right now. So when I was saying we're in a bear market, let me explain to you. I'm not one of these people just telling you something without explaining to you or without showing you. Let me show you exactly why. So when you back test, when you trade with algorithms, back testing means you're looking at the past performance to see how your algorithm actually performed. It's not we're looking in the past to see what the price was at that time last year or 5 years ago. You know what I mean? That's bullshit, because price is never going to be exactly at the same time repeating itself. It's always based on how your algorithm performed in the past. Okay, so let me give you some examples. Let's go to the right. Let's start from the right all the way to the left. Right now, we see this blue moving average right here. We follow the cursor. This blue moving average is under this orange moving average right here, right? Every time in the past, when that happened, the price was going down or up. So currently, the, the price is going down. That means it's going to trend down. The reason I say it's going to trend down because if we back test, let's go to the left or right. Now we see the blue is over orange, right? The price was going up, right? But when we go back to the point where the blue crossed over the orange, that's what happened. So when it went from left to right, the price went up. So it's safe to say when that blue moving average is over the orange moving average, the price is going to go up, right? So let's go from right to left again. If we go from left to right, we see the blue is under the orange, right? To that point when the blue went underneath the orange, the price is going down, and so on and so on. It's going from left to right again, from right to left, I'm sorry. The blue is over the orange. If we go back, that's because the price was going up. So if it keeps on making those patterns on a monthly time frame, it's safe to say it's going to repeat itself, right? 100% accurately, right? Now, if it does something different, that just means it's going to do something different. But based on past performance of the moving averages, it's easier to trust the moving averages because the moving averages simply trail the direction price is going. Okay. And when you go to smaller time frames, you're just looking at everything you see here as smaller time increments. So let's go to a weekly time frame. Now, just how we saw when we saw the for the month, how price was going down, right? One candlestick formed while going down, right? It takes about what, 4 weeks for a month. This is the new. Now this is last week. The new week hasn't started yet. So we're gonna say one, two, three, four. 1, 2, 3, 4. Right up in here, about three. This is about 3 months right here, right? Remember how we just saw on the 1 monthly that is downtrending? It's been downtrending for what's going on for the last few weeks. What we saw on the month is equivalent to what's going on right now with the weekly time frame, okay? Now we see other moving averages on here. We didn't see these other moving averages on here because they're slower moving averages. We did see the 50 moving average on here on the monthly, and let me show you before I go back to this weekly. this 50 moving average was on here because it's faster than the other moving averages, but I'll explain that, okay? Okay, back on the weekly time frame, here's the 50 moving average. You see how, like I mentioned, every time when certain algorithms, every time when certain indicators was over or under each other, the price kept going up or down. Okay, so we see here those moving averages we were looking at that were closer to the price to the candlesticks right here again. By the weekly time frame, when the blue is under, the orange price goes down. Back test and go to the past. When the blue is over, it went up briefly, right? Up in here, this was consolidating. That's why you don't really see a lot of space with the crossover. You see it kind of price was stagnant in a certain area. But as we keep back testing, looking at the past performance, going from right to left, the blue is over the orange there the whole time, right? It crossed over here, so going back from left to right, price was going up when the blue is over, right? Now let's look at these slower moving averages. When this blue moving average go over this orange moving average, the price is going up overall because these are slower moving averages. Okay, slower moving averages follow the direction of price just at slower speeds, but it still responded to live price action. Okay, let's break it down again. Let's go to the daily time frame. Again, remember we talked about what was going on for the last few weeks. That's what's going on from here to here. This is equivalent to those months we were talking about by the days. This is the daily time frame. So each one of these candlesticks took a day to form. We still say the same pattern from the monthly when it was going down. Matter of fact, let me make this easier for you. Add a new window, make this smaller. All right. Now we're really going to be able to see something. I might have to hurry this video up because I know I only got so much time on this actual record. You see from here to here on the monthly, that's what we're seeing from here to here. Okay, it's just broken down in smaller time increments. Okay, so basically what you're going to get when you go ahead and buy this strategy, you're getting years of algorithmic trading experience from somebody that know how to develop um an algorithm and stuff like that. And you're basically able to understand where price is going to go based on the algorithm. Just follow the direction the price is going based on the moving averages. The moving averages never lie. The moving averages are always right because it's responding to price data. It's responding to price data. Okay. So I'm going to go to the 1 minute now, and I'm going to give you a real good little understanding so you can understand how it moves. Okay. How it responds to price data. Okay. Right here, you see where it says 41 seconds right here moving up and down. This is live raw price action right now. Bitcoin is at 90,014 whatever dollars right now. That's live price action. You notice how it's attached right to this candlestick, right? We all know candlesticks form based on price action, whether it's going up or down. The farther down it goes, it's going to leave the wick there, like we see right here. If it goes up and down, it's going to have a body and stuff like that. So also, we also notice when I make this bigger, the moving average right here, you see how it's responding to what this actual candlestick is doing, and the candlestick is responding to what the price action is doing. So moving averages are following price action that's attached to candlesticks, or you could say moving averages are simply following the candlesticks that's attached to price action. It's all the same. So the movement of these moving averages is real. It's accurate. It's never a situation where the trading strategy is not working. It's always based on what's the condition of the markets, what the market is doing. It can only respond. So there's never anything wrong about moving averages. If you're looking for somebody who can build you an algorithm that is 100% accurate, I'm that guy. Now, I can't say it's going to be 100% profitable because, again, based on what the market could be doing, you could be in a consolidated zone of trading, meaning there's not really going to be a lot of volatility for you to even make money. Okay. But look, as we see back to my algorithm, you see how these moving averages, again, these particular moving averages, just like we saw in the monthly, these moving averages, remember, they all adapt to whatever price is for whatever the time frame is, right? You see how the blue is over the orange, under the orange when the price was going down, right? And when blue is over orange, price was going up. These slower moving averages is the same thing. When this blue moving average right here is under this orange, price goes down. We know this price was trending down. These are slower moving averages. Okay. When the blue is over the orange, up in here, price is going up. So moving averages, again, it just trail price based on the parameters that's created. Okay. If y'all need somebody to build you or develop you an algorithm, you can reach out to me, trademo314 at gmail.com. That's TRADEMO 314 at gmail.com. I have years of experience of developing algorithms. I can develop this for the MetaTrader 4, MetaTrader 5, CTrader, TradingView, CloudTrader. This algorithm can work on anything. Now, as far as like giving you the alerts, I could do it for MetaTrader 4, MetaTrader 5, CloudTrader, TradingView. TradingView doesn't come with a sound alert system. I don't know why they don't do it like that, but they don't. This CloudTrader does. MetaTrader 4 it does. MetaTrader 5 it does. You can automate your trading with MetaTrader 4, MetaTrader 5 by simply going through a company that will allow you to automate it. Some people charge $100 a year, some people charge $5 a month. It's whatever good for you. You can't automate trading with this particular company that I'm using. I recommend you just do it manually. This company, in my opinion, this broker, the automation, I don't know. But I also learned sometimes automated trades just don't simply open because if there is a lot of volatility or not a lot of volatility and whatever you're trading, sometimes the trades just won't open. So it's not really their fault as well. So it can't be too much or it can't not be any, like just no volatility at all. Okay. So yeah, so like I've said, I've showed you everything I'm showing makes sense because when I back test the algorithm, you see everything I'm saying is accurate to what I'm saying. And it don't matter what time frame I go on because remember it's just broken down into time increments. See, on the 2 minute time frame, look, this blue moving average right here, making it small. When that blue went under the orange, price was going down, right? You learn how to keep these trades open based on that. Even though it went up a little bit, you should still trade based on what it does. Look, price was going down. All it's doing is following the direction the price is going. You see, I was consolidating up in here. Moving averages keep you in check. You need something that's going to keep you in line, keep you in check, keep you in order. You know, this is trademo.co.